Hello, everyone. Now, I have mentioned a number of times in past videos that I like Global Atomic and I own a bunch of it, but this video is going to be all about the details of why I like it, why I think it's a very appealing risk-reward setup, and what my thoughts are on how it compares to its peers. Get ready to roll your eyes, everyone, because this video, well, parts of this video at least, will sound extremely biased. Remember, I have been buying a lot of Global Atomic. I've been buying it for a while. So I probably have too much of it at this point, but remember, everything you see is based on what you can assume is a biased opinion. Well, assume it is, and you're less likely to be annoyed. Now, the other thing is I make a number of comparisons to its peers. I'm not doing this to be a jerk to the peers or to global or whatever. I'm just trying to explain why I prefer global in different ways. Again, nothing here is investment advice. Okay, so let's start with the basics. Global Atomic, their market cap is approximately $71 million at 49 cents Canadian. Their forward price to earnings, and this is an estimate, is probably about 5.5. They have probably, again, estimating $4 million of cash and $14 million worth of debt. This comes from their refit of their zinc operations, but this debt is probably decreasing at about 10% per month. Okay, so now before we go into the uranium bit, which is the exciting part, I guess, let's forget uranium for a second. Because part of what makes Global Atomic different from all the other uranium companies is that they have some cash flow from zinc. Now, if zinc is going to tank, well, then that doesn't do them any good. But in my view, and again, this is my view, zinc has some decently defensive fundamentals for a base metal. And by this, I mean their inventories are at a 5-year low, and in the later 2020s, it looks like there's going to be a deficit. So any collapse in price that would cause shutdown of mines, I don't really know how much staying power it is. But anyway, what do they do? What does Global Atomic do with zinc? Well, Turkish steel mills are now being mandated to recycle their electric arc furnace dust. So Global Atomic recycles that into a zinc concentrate, which then is taken away by Glencore. Well, taken away, but sold, basically picked up by Glencore and sold. So they recycle the zinc and they do that and make approximately 15 million US dollars. And again, in the previous slide, I showed you Canadian dollars. So 70 million Canadian is probably closer to 50 million US. And in here, the EBITDA, cash flow being used to pay down the debt, the 15 million US dollars is approximately 22 million Canadian. And again, this is EBITDA, so it's not earnings. But if we looked at the last earnings, they earned $13 million of EBITDA, turned into $10 million. So by that translation, we could get maybe 10 million, being fairly conservative, if they make 15 million in EBITDA. So not bad, especially when you consider the market cap of the company, which gives us a pretty low valuation. Now, the partner in this endeavor for Global Atomic, the zinc endeavor, they receive a much higher valuation. Now, I would argue that they should because they're bigger and diversified, but to this degree, I don't know. I don't think so. Now, I just wanted to point this out because it's quite relevant. Think of it this way. If you ignore every pound of uranium that Global Atomic has, you're buying a profitable and has been profitable for many years recycling zinc company that has an arguably cheap valuation. Okay, I know what some of you are probably thinking right now. Why would I want the Happy Meal toy equivalent of a uranium project as my uranium investment? Well, that would be a very good question if that were the case. But in reality, let's have a look at the 50 companies, the 50 uranium companies. Well, I would say 15 aren't really uranium companies. They may have a project that might have uranium or something. And then another 15 don't really interest me personally. So really there are 20 real options. And I would contend, and I'll make many points later in this video, that Global Atomic's project is one of the good ones. Now, I don't know about you, but when I'm going to build a big position, I prefer to have one that is less vulnerable to market-related nonsense. For example, I don't want a position to be my largest position if it's going to fall by 30% or 40% just because it needs money to get it through the end of the year. Because say what you will about a lot of these juniors, but if they need to raise money in the wrong market, that can be terrible for them. And I don't want that on a big position. Now, at the same time, I prefer to have a big position on a big thesis to be something that, if I'm right, it really matters. Now, on the subject of big, let's have a look here at Global Atomic's main project, DASA, and its size, and how it compares to other projects from around the continent. So first, I've seen some people compare Global Atomic to GOVIEX and using a cutoff grade similar, slightly lower, I know unfair, slightly lower than GOVIEX's cutoff grade, we come up with a project that would be approximately 210 million pounds versus GOVIEX, and I know people will tell me they're going to expand it, okay, but for now, GOVIEX 140 million pounds. But if we were to lower the cutoff grade to something closer to Bannerman at Global Atomic's DASA, then we get something closer to 257.5 actually million pounds. So the point is, this is a pretty sizable project and not bad for a Happy Meal toy. Now here's some more ways of looking at how GOVIEX and Global Atomic compare. Capacity, well, 4 million pounds, well, approximately, versus 2.7. Price per pound, my least favorite metric. They're both approximately 29 cents a pound for the uranium. Similar grades in terms of parts per million. Secondary projects, well, they both have numerous secondary projects, but if we compare their secondary projects, Global Atomic has less pounds, but a higher grade than GOVIEX, which has more pounds, a lower grade. And then there's this bottom one, which is very important, but a lot of people don't really seem to mention it that often. And this is warrants and options outstanding. Now, I did it here so we can see as a percent of their current market cap, or as a percent of their current shares outstanding, how much dilution are you facing if things go really well? Well, if things go well. For Global Atomic, it's about 10% currently. For GOVIEX, it's closer to 33%. But of course, it's ridiculous to just compare it to one other project or one other company and say, oh, this is slightly better or worse or whatever. Here is a look at very generalized, very unfair categorizations of other projects by region. And so what I'm trying to show here by target is, can it be bought out by Russia or India or China or United Arab Emirates? Can it be bought out? By cost, again, this is a gross generalization, but you can see. Permitting time, are we going to be waiting long for the permitting, or is it going to be quick or something different? And this category, which I know is unfair, but really it's a big part of Global Atomic, does the company have cash flow? Does it have cash flow? Or if things take longer, is the company at the same share price getting more expensive by the day? I know the thesis is getting better by the day, but the company's getting slightly more expensive. Now this is being more than offset by the uranium thesis getting better by the day. But with a cash flow, the company, if they're profitable, gets cheaper by the day. And there's a big difference there if you're going to be waiting a long time, or there could be. And finally, this is completely arbitrary, the last column, that's price in terms of relative price, how expensive or cheap I view them relative to their set of fundamentals. And this is, again, personal. Now, one thing I didn't harp on in the previous slide, but I will here, because for me, it's pretty important, is where are places and how many companies are not likely to be held back by government efficiency? Because when I look, I see approximately 13 or so companies that are unlikely to be held back or have a real project and are unlikely to be held back. And those projects are mostly either restarts, producers, or based in Africa. So that narrows down the pack a lot. And once we start tacking on other criteria to not likely to be held back, it cuts down the list a lot. Now here is where we get to what differentiates DASA from most other projects around the world, and that is grade in their flank zone. Now I laugh when I see some companies talk about their high grade or super high grade uranium project when they're talking 800 ppm because it's funny. It's funny because when you go to the Athabasca Basin, you have percent grades, and percent is 10,000, I think 10,000 ppm is 1%, if I have that right. But anyway, at DASA, the flank zone has, and again, this is its best intercept, so take it with a grain of salt, but it had 3.5 meters of 22%. 22% U3O8. Now, I don't know of anyone else anywhere else in Africa or in Australia for that matter with that grade of uranium. Normally, that grade is only in the Athabasca Basin, where the problem with it normally is that it will take a long time to permit. Now, not the 20 years that certain people like to anecdotally say, but still it could take a long time versus in Africa, for DASA, probably won't. And the key here is that this gives them the ability to not need, well, hopefully this gives them the ability to not need $70 uranium in order to go into production, meaning they don't have to rush to be ready for when the price moves. They can do what they need to do on their own time. Which gets me to the point of debate. Can they make it work at $25 uranium? We'll start with saying if they were in production already, had all their capex and whatever, and they were working in the flank zone, then I suspect they could probably continue production without having to shut down their mine. That being said, in the 20s, could they start production? I don't know. I doubt it. Should they start production? No, they should not start production in the 20s unless they thought the price was about to spike and they were trying to get the first mover advantage. But even then, why? I would hope that they would have contracts if they tried to do that. I would hope they would have contracts higher. But the point here is they're not like most other juniors in that they aren't burning money by the day. They can afford to wait for a reasonable price. And especially in this point, can they make it, should they make it work at 25? Especially because of the way that the tax situation works, they should not try to make it work at 25. And now I'm sure I'm probably going to get a bit of flack for saying this from someone who's not going to be happy. But a lot of people often ask, well, why not this Athabasca thing, or why not some US producer as my favorite pick? And the point is really that if you're looking at the big Athabasca Basin projects, there's a good chance that Global Atomic can beat them all to production. Now, again, maybe permitting goes much quicker this time in the Athabasca Basin, maybe not, but I honestly believe there's a decent chance that many of the projects in Africa could beat the Canadian projects to production. And as to the US producers, well, the US producers are reverting to US developers because the price isn't high enough. That's one response that I would give. And another thing is producers are normally valued at a premium because they're cash flow positive. And the US producers mainly have 1 or half a million pounds or maybe 2 million pounds of production capacity. Now, some have more, but they have mainly less production capacity and higher costs. And I just can't justify paying 1.5, 2, 3, 4, up to 5 times as much for the US producers when there's a situation like Global Atomic. Now, I don't really want to talk too highly about ISAKANAN because it is Global Atomic's really their tertiary project. But maybe it's worth mentioning that this is their second uranium project. So they have their DASA, I would say there's their primary asset. They have Iskendron, which is the zinc asset to support that. And then they have this other uranium asset, which is nowhere near the size of DASA, but it is 33 million pounds, which when you look at compared to the whole list of peers, there's some companies that 33 million pounds is bigger than. And there is there's potential for expansion of those 30 million pounds. Now, the reason why I mention this as more than a nothing project is because it's being tested for ISR potential. And if that is able to work, then we're talking about the potential for another project that could produce maybe 1, 2, 3 million pounds a year, depending on how expandable and scalable it is. And I know that that's not worth a ton today, but I could see a day where it could be worth a lot, or at least a decent amount, especially considering where it is and the potential for a shorter permitting time. So using the preliminary economic assessment as a bit of a yardstick here, and we look at what Global Atomic could look like if a number of things go well, and still a number of things that have to happen. But DASA could be producing 4 or 7 million pounds, depending on the year. And then you have the other asset producing maybe 2, maybe 3 million pounds. So altogether, you could have 7 to 10 million pounds of production at sub $30 all-in sustaining cost, which would mean that around $50, you're probably making twice the current market cap of the company in annual cash flow. Now, I know this involves a number of projects being brought into production, but my point is just the assets are there, and the dilution protection should also be present. Now, when I say dilution protection, what I really mean is a defense against excessive dilution, because most companies find a way to issue more shares than you'd like. Now, my point is, in this case, you have an insider, or the chair of the board owns 8.2%. So, at the very least, we should hope that they do what they believe to be in the shareholders' best interest. Now, whether they're right or not, we'll see at some point. Now, Stephen Roman has had some big successes in the past. Well, he made many multiple return on Gold Eagle. There's also been some failures. So he's not perfect. No one is. But it's important to recognize. Now, overall, I think the team is fairly decent, and I do think they own enough shares that they won't want to screw things up too badly. Now, personally, I wouldn't mind them delaying spending in certain areas if it meant preserving the share structure. But again, with the ownership, they'll have to make the decisions that's right for them and them as shareholders. Now here I just put this little comparison together to look at where Global Atomic does better than their peers, where the thesis is stronger to own Global Atomic, and where the thesis is stronger to own some of the other African peers. And in my view, it's stronger to own Global Atomic if things take longer, or if the price stays lower for longer, or if the whole group of uranium stocks don't do well. In other words, if things go less than great, versus the thesis where Global Atomic is slightly weaker is where basically if the price spikes to $70 in the next few months, at which point, honestly, I can live with owning Global Atomic. Now, I'm not here to say that Global Atomic is perfect. It's not. They still do need to spend some money to get through pre-feasibility and feasibility. So there's some spending ahead. Also, they are a bit behind some of their neighbors. As I said, they're starting a pre-feasibility study. Some of their neighbors have it. Some of their neighbors are working on a feasibility study already. So in that way, there's a few months, maybe a year behind, maybe slightly more, depending on how you want to measure it. Also, I can understand some people not wanting to invest in their location. What I would say to that is there are multiple Western military bases in the region, and they're not near any of the borders. So it is a relatively secure area where uranium mines have operated for a long time, largely undisturbed. Also, I am aware that management doesn't have a perfect track record. So that is something to look into before making an investment. So let's just recap the full investment proposition here. You have I regard it as cheap, zinc recycling company. I could see it being valued at maybe 100 million US. And this is relevant because it provides some protection against dilution if the cycle takes longer. You have the third biggest uranium project in the world, the second biggest in Africa, and the highest grade in Africa. And even if we cut out any premium to the high grade and current value, maybe 50 million. I used an approximation based on GOVIEX's price. So if this were GOVIEX, it would be worth 50 million and had nothing else. And then we have potential for another maybe 30 million pound ISR, maybe much more than 30 million pound. We'll have to see. Today, what would that be valued at? I don't know here. There, 10 million. I'm really cutting a discount. And again, those uranium projects, that's today's value. Future value is to be determined. And you get all that, and the company is currently priced at approximately 50 million US dollars. Let's have a look at my biases. Well, I like uranium, spoiler alert. I'm more neutral on zinc. I think it has decent defensive fundamentals, but we'll get to that. We went through that. I like African uranium juniors, and I really don't think they get the respect they deserve. I think they're probably one of the most undervalued subsets of uranium stocks right now, but no, most people seem to be preferring North Americans, maybe because of cost, maybe because of familiarity, whatever, I don't know. I hate dilution. I cannot go in size. Like I can't buy a lot of something if I think if it's going to need money near term because it's going to issue shares and that could knock the price down a lot. So I really dislike dilution. I prefer scenarios where time works on my side. If the stock is getting cheaper by the day, that's a scenario that I like. I also like tiny companies. I don't prefer them, but I'm I guess more comfortable with them. I like them. And I also like being that jerk who is able to profit from the BS that everyone else that is an annoyance to everyone else. Now, I'm not wishing BS to befall everyone else. I'm just saying I like owning the company that's in the position to benefit from that when possible. And even understanding that, I think that this is why I find Global Atomic immensely mispriced relative to other uranium stocks. Now, in closing, people often look for asymmetry, which means what can go right and how good is that versus what can go wrong and how bad is that. Now, here you need multiple things to go wrong from this point in order for value to be lost or destroyed. Multiple things that I don't think will go wrong, but you need two of them to go wrong to have some value destroyed. Whereas you really only need one of a number of things to go right in order for value to be gained. So I really do view this as a buy one, get one free situation, or even a free lottery ticket. Now, I'm not saying it's going to go 100 to 1. I don't think it'll go 100 to 1. I'm just saying decent return, a good return, and a free option on that good return. That's all for today. Thanks for watching, everyone. Remember, I own a whole lot of this, so take everything I said with a grain of salt at the very least. At the very best, ignore everything I said. And with that in mind, remember that nothing here is investment advice. With that, have a great day.